This is the Financial News Network. I'm Christy Duffy. Google reported its third quarter earnings results Thursday after market close. The search giant posted a 32% leap in net profit and a 23% gain in revenue. Net profit of $2.17 billion and $7.29 billion in revenue both beat the expectations of Wall Street analysts. With me to discuss Google's earnings and what's next for the company is Clayton Moran of the Benchmark Company. Welcome, Clayton. Google continued with more acquisitions during the third quarter. As Google gets larger and the numbers get bigger, does the company's rate of growth have to decelerate?
Yes, the rate of growth has decelerated some. The expectation is it will come off a little bit more. For instance, partially due to the recession, last year growth was down to only 10%. And of course, in prior years, we've seen 30-40%. Now that the advertising recovery has taken full hold, we're back up to over 20% growth. But the expectation is as the company gets larger, we will see that growth rate begin to come down again.
What's an appropriate multiple to apply to Google's earnings?
We're using 20 times. We think that it's about a 17% earnings grower per year, and we think it's pretty clearly a leader in digital advertising, a very high-quality company with strong margins and good cash flow. So we think, just over 1 times the earnings growth rate is about right. So we're using 20 times on a 17% annual grower.
How has the YouTube acquisition impacted the company's top line?
YouTube's doing very well. They don't break out the exact contribution from YouTube, but YouTube's really begun to gain significant momentum as of the beginning of this year, and the display business as a whole is now 9% of the total revenue. So it's become a meaningful contributor. We think YouTube's probably the biggest chunk of that display business and is doing quite well.
Do you see any more large acquisitions?
It's always possible. I mean, Google's sitting on over $30 billion of cash, although large for them to date has only been about, 2 to 3 billion. So pretty big by most standards, maybe not that big given how large Google is. So we think certainly they could do sizable acquisitions in that $2 to $3 billion range going forward. There's no candidate we would target today, but, you can't rule it out.
And what's the employee count?
The employee count continues to rise. It was up about 7% in the third quarter. I don't have the exact number in front of me. I want to say 22 or 23,000 employees. And the expenses are rising pretty rapidly, too. But the good news is the revenues are growing faster or as fast. And so they're generating nice cash flow, and you're not seeing a significant amount of pressure on margins. So while they're ramping up the operations and the head count, it's only really to support strong growth.
How has the innovation in search, mobile, display ads, and video helped to maintain Google's revenue growth?
Sure. Well, mobile and display and video, we think are growing, faster than search. They're obviously coming off a much smaller base. So we think they're growing maybe as much as twice as fast as search, so certainly helping the overall growth rate. And really, that's the big news coming out of last night's earnings report, that not only are these fast-growing segments, but they're fairly significant, too. And there's been a lot of investor concern that these businesses wouldn't really be large enough to have a strong contribution to the overall growth rate. But it looks like they're aiding growth by a few percentage points. So I think that was, one of the real positives out of the report.
What's your view on cost per click growth trends?
Cost per click hasn't really rebounded that strongly with the economic and advertising rebound. We think it's up about 10% domestically, but it's only grown 3% year over year globally. So we think there's more room for the global market to enhance cost per click as those less mature markets see more advertisers come into the business and start to bid up the keywords. So I do think there's potential for cost per click to go higher.
And what about paid click?
Paid clicks are growing nicely. Last night they reported 16% year-over-year growth. That was up from 15% in the first half of the year. So seems like volumes never really slowed meaningfully, so I wouldn't expect paid clicks to continue to accelerate. I think paid clicks growth will probably be roughly flat going forward. It'll flatten about 15-16%. But cost per click probably will begin to become a little more of a driver.
How is Google doing internationally?
Well, international operations have been strong for Google for a long time. They're very, very well positioned in Europe, where they have probably 90% plus market share. One of the concerns has been that their market share is so high there's not that much room to gain, which is true. But Europe's a real stronghold for Google. And now they're starting to do better in areas like India and Brazil, which are helping push growth. So international, which is 52% of total revenues, is definitely a good driver. And if you sort of pro forma for the effect of currency fluctuations, international was up 26% year over year in this past quarter. So really, Google's doing well across the board.
Okay, and Google TV, is this a general hobby for Google, or is there a broader long-term play to try and push onto Apple's turf?
Yeah, definitely a broader long-term play to benefit and participate in TV advertising, certainly to take the platform that they've created and extend it to the video world. But it's not really it's just getting started. It's not at all meaningful today. I don't think anybody's counting on TV being a significant contributor anytime soon. That's sort of like the next emerging area for Google to explore and invest in, and it'll probably be several, if not 5+ years before that becomes something significant.
Is Google stock still a buy at these levels?
Yeah, I really think it is. Google's been an oversold stock and an underloved stock this entire year. So it's something that really went out of favor as Apple really came into favor. It was almost like a comparison for investors that Google was losing. Apple was doing so well. Google was only doing okay. Now I think sentiment has changed some. Google's showing strong growth across the board. People realize it's an attractive value here, and I think the momentum's back. So we raised our price target this morning to $650 a share, and we think this stock will continue to do well.
Okay, and what other stocks do you like in the online space?
We like the online travel agents, particularly Expedia, Priceline, and Orbitz. Those are the three domestic public companies. They're both seeing accelerating growth, and that's an area that really lags the overall economic recovery. In other words, it's about 6 to 9 months behind the overall recovery. And so growth is really just beginning to reaccelerate for them, and their values for the most part are reasonable. Certainly Expedia trades sort of at a stock market multiple of earnings. So we like the online travel agents. And then the other one in the advertising area that we like today is ValueClick, which is a display ads company that trades at a pretty low multiple, but we think will benefit from Google's recent introduction of instant search.
What's your best pick in the online space?
We sort of prefer right now Google and Expedia, both of which trade at very reasonable values for strong growth. So they're both what we call growth at a reasonable price, GARP stocks, and both have good operating momentum. So I'd pick Google in the ad space and Expedia in the commerce space.
Thank you, Clayton. For further earnings updates and analyst insight on those reports, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.